Hello, everyone. This is Alan Wang with Alan Wang Realty Group at Keller Williams, Santa Clara Valley. Extremely excited to tell you about our Q1 2022 Silicon Valley real estate update. Without further ado, there are a lot of changes going on. I want to inform you. First off, the majority of markets are still in a seller's market. There is still continued momentum from buyers, yet we're seeing lower quantity of offers, yet still high quality in a majority of our listings. However, not all homes are guaranteed to sell with multiple offers. Something very important to inform you of. Why is that? Well, there's inflation concerns, rising rates, and volatile stock markets, as well as a war in Ukraine. First things first, how about inflation rates? These have not calmed down since COVID and also the war in Ukraine. We're at 7.9% currently, and this is a major concern for the Federal Reserve. And hence, the Federal Reserve has already risen rates by a quarter, and they plan to do this 5 to 7 times this year. Real estate is definitely a target. Real estate has been on fire across the nation, multiple areas. Locally, though, our mortgage interest rates are at 3.875%, up to about 4% for a jumbo loan. Nationwide, it's higher at 4.42%. The Nasdaq has also been a very choppy ride. At the peak here, we were at a major peak, and we had actually had a major dip because of the war in Ukraine on March 14th. And that was a 20.5% drop. Yet today, as of April 1st, we're seeing a 9.3% drop from the peak. And so things have recovered, but it's still very choppy, as you can see from the chart. Unemployment, there's good news here. Pre-COVID, the unemployment rate was hovering around 4.1%. And now, once COVID hit, it hit as high as 16%. But those are now leveled off to about 5.4%. So we're getting close to what unemployment is in California typically. So everyone that wants a job has a job. Now, what are our projections for Q2 2022? From a macro level, there are going to be changes in the real estate market, but most likely they will be gradual. There does seem to be enough momentum to carry us to the rest of this year, but we have to monitor the inflation rate and what the Federal Reserve does on mortgage rates, and of course the stability in NASDAQ. These factors will drive how fast we actually have a cool down. Now, if you're a seller and you've been looking to sell, it's probably a good idea to go as soon as possible. There's been an amazing uptick in prices, and it's good for you to take advantage of it now before anything changes. You do have to taper your expectations. Yes, some areas are still red hot. You'll get multiple offers and perhaps an obscene price, but not always. And I think at times sellers forget that all we need is one offer. It's great to tell the story that I had X amount of offers. And if we price it low enough, we would get a ton of offers, but we only need one. So one high quality offer is not a bad thing. As a buyer, we understand it's been a very tough journey and an exhausting journey, but be prepared to jump back in the market, start making offers again. You might be able to catch a wave where property seems to have low offers. Again, you're never going to catch the bottom. And so if you have housing needs for you and your family, we always consider real estate to be a nice long-term investment. Now contact us if there's anything that you needed. Of course, Alan Wang Realty Group at 408-313-4352, and also Alan at alanwangrealty.com. Reach out to us and we'll be happy to have a customized consultation for you and your family. Have an amazing day.